Good morning, everyone. Welcome to that week four. We are going to cover a couple of deduction topics today, especially car expense deductions and travel expenses deductions, such as accommodation and meal and incidental. And going to talk about the self-education expenses, and we will discuss about the phone and internet expenses. That's the main part of the discussion today. So we will start with the car deduction first. As we discussed last week, we said that travel between home to work is not deductible because that legislation or that ATO guidelines consider that one as a private nature. Travel between home to work for an employee normally considered as a private nature. Therefore, we cannot deduct from income tax. Right. So that now we will see what are the circumstances we can deduct from our income tax car travel between home to other places. So when we come back to that next slide, so what you can claim if you travel between two workplaces, it will be deductible. What do the two workplaces mean? Your clients working with the two separate jobs. If we go to one job and finish this job and going from that job to other job, between the two jobs travel will be deductible. It is not deductible from home to the first job or second job to home. It will be not deductible, only deductible between the two workplaces. If morning he started to go to job and finish that job, and from that job to other job he travel, in that case both will be deductible. So it's not deductible from home to the first job or second job to home will be not deductible. Alternative workplaces. Sometimes that employee is working in an alternative workplace. For an example, you are working in a Commonwealth Bank in a particular branch or particular office, and your employer manager can ask, can you cover up somebody's duties in other branch today, tomorrow? In that case, when you travel to that your alternative workplace from your home to that bank or home to that particular new branch, that will be deductible. That's called alternative workplace. You your permanent workplace in a place where you are working, but you are asked to go and attend a work in other place for a short period of time, maybe a week or two. So that's called your alternative workplace. So if you travel from home to your alternative workplace, both per travel, go to the work and come back, both will be deductible. Other one, alternative workplace not only will come up with that working, sometimes some clients, some some taxpayers, they are traveling to meet the clients. So you are working in the accounting firm, you go and meet some other clients in a different locations. In that case, wherever you go and meet your client, if you started from your home to meet the client, that will be deductible. For an example, you are working in accounting firm, you are client from Melbourne, but your accounting firm in Sydney, you go and meet the client in Melbourne. So in the case, from home to that your travel to the client will be deductible. This alternative workplace will come up, for example, employees or taxpayers when they attending the training, conferences and seminars, that and that case when they attending that type of things, we can consider as an alternative workplace for them. So travel between training places and seminar places from home to the places and come back will be deductible from their uh, income tax. So that other point is the travel, the carrying bulky tools or equipments. So whenever that taxpayer carrying the bulky tools or equipment, it can be deductible from income tax. You can see the tradies and that, especially plumbers and electricians and carpenters, they carrying the bulky items, the tools and ladders and a number of different equipments. That will be, if you were required to carry that one, it will be deductible. They cannot keep it in that place where they are working for a couple of hours, right? They want to move into the different places. Therefore, that's required for them. They cannot take all the stuff with the public transport. So therefore, it will be deductible. where they have a shifting workplaces of employment. What does shifting workplace of employment mean? They are not going to be in a one workplace. They are working with a number of places. For example, electrician or plumbers, they are not only that working in a one place. They work in one client and repair that plumbing work and moving to other one and giving the code to the different client. So that they travel different places. In that case, when you're carrying the bulky tools and equipments, it will be deductible. Or you cannot keep it that equipments in the same place. Directly from work to place of your approved self education will be deductible. So I'm going to cover self education today after the break. Whenever that's a client required to that, if we do the self education, travel between that uni or TIFE and come back will be deductible. Both travel go home to that uni to home, both will be deductible if you directly travel from home to that study places. Who What you can climb a little bit more about that. The travel is a fundamental part of your work. So, right, travel is a fundamental part of the work. In that case, part of your work, it is can be deductible. So, whenever, for an example, the Uber drivers, their fundamental part of the work is travel, right? Or that day to day, sorry, door to door selling. Consultant, they knock your door and selling. Their part of their fundamental part of the work is travel. Uber drivers, Uber Eats, door-to-door sellers, catalog delivery. All this stuff are fundamental part of the work. You travel, a lot of places that can be considered as a from your home to travel all these places and come back to home can be considered as a work-related travel, and you can deduct. This can be considered web of workplaces. You are traveling number of workplaces in a day. So a good example is marketing consultants. They go and meet to that one client and finish that next meeting in the next place, next meeting in another place. Therefore, they working in a different locations, number of locations. That's called web of workplace. In that case, they can be climbed from the home to the travel and come back. Continuously travel, that's the one I talked about that couple of minutes before. Your Uber drivers, or that's Uber Eats, they're traveling continuously, and as well as that um, your catalog delivery, that's all sort of that taxpayers continuously travel one work site at another. So therefore they can deduct from their home to travel between that places and come back. uh, Home is the base operation. Sometime that the taxpayer working at home as a base operation and then travel to the different places to deliver. Especially some of the catering businesses, they cook at home and take into that places to for the catering. So they are fundamental part of the work, the home base operation, right? Therefore, it's deductible. Assume a bookkeeper is working from home in his study room, and he will go and meet to the clients. In that case, that his work is home based operation. So from home to that any places they travel will be deductible. Often uncertain about that workplaces. For an example, relief teachers or that agency aged care workers or agency nurses. So this type of jobs you can see they are uncertain about the job location next day. The morning you will get an SMS. Today you are working in the Blacktown Primary School. Tomorrow Parramatta High School. So they are not sure where they working next day or next other work. So in that case, that will come up under the uncertainty about their workplace. So in that case, their whole travel will be deductible. So working that people working under the temper agency for a temp, especially that leave teachers and on-call nurses. Um, so from the agencies will be deductible. your employer provided to that allowance to recognition of you need to travel continuously between different work site. You use this allowance as a pay for your travel. So if your employer paid to the travel allowance through your payment summary or through that your payroll system, in that case what happened that your award recognize your work related travel is acceptable, or your employer recognize that's more than enough for us for deduct your work related travels, right? That's one of the dividends easily we can use. So you can't claim cost of the car between that work and home just because of following. So if you're doing say some minor works, on the way you're picking up that post letters, or on the way you are depositing in the bank, money in the bank, in that case that you cannot deduct that your work to home travel. On the way somebody picking the mail, on the way I'm depositing in the bank, so that depositing the money in the bank. So in that case that cannot be considered as a work related travel. That's a minor travel. You're just driving to home, just turning to the bank or just turning to the post office. That not going to be considered as a work related task, because that if you go through the way to your home, if you do, but if you from the office you go to bank and come back, that will be deductible. From office you go to post office and come back to office, that will be deductible. But if you when you go to from home, your office to home, on the way you deposit the money and go back to home, that will be not deductible. But from your workplace, go to post office and come back to home, workplace, or go to bank and come back to workplace, that will be deductible. But if you travel from your home, go to bank and deposit the money and go to that your work, that will be not deductible. When you finish your work and come on the way and pick some letters and come to home, next day morning you can bring back to that your workplace, that not deductible. But very clear, this minor related, even minor related, if you start from your office and go to the post office and come back, deductible. Go to bank and come back, deductible. But on the way to your home, if you do something, that cannot be considered as a work related expenses. You are driven between home more than once a day. So if you go to the work and come back for coffee, come back for lunch, come back for tea, and so like that number of trips you make it to home cannot be deductible. Only one trip between home to work will be deductible, right? Unless you are doing some fundamental part of the material at home, you want to come and pick it up, that's fine. Otherwise, only one trip between home to work. So most of the time that on call, doctors and nurses, they are on the on call, that on reason for the standby duty cannot be deductible, right? So you how is that work? So you know that where you are working tomorrow morning very clearly, or tomorrow whatever time. Only you are not sure about the timing. Therefore, uncertainty, there's no uncertainty about your location, only uncertain about the timing. So that's reason you cannot climb for on-call duties your travel between home to work. That's kind of standby duty, right? So sometimes the clients will come and ask, there's no public transport to my work. I want to claim my car deductions. For example, that internet students working in the regional farms, early morning, 5 o'clock, they want to be in the farm. There's no public transport. In that case, travel from home to that particular farms, they will come up with the argument. There's no public transport. We are using the car. We want to deduct the car expenses from in our income tax deductions. However, there's a no public transport reason not enough to deduct that car expenses. So we unfortunately we cannot deduct their car expenses, saying that only for the reasons there's no public transport. Sometimes, especially that health industry or that's in the factories, their shift finishing around 11 o'clock or 12 o'clock, middle of the night. So they may say because of the safety, because of that no public transport, we're using our car, we want to deduct from our income tax. Unfortunately, that reason not enough for deduct that. Right, that's your personal choice. You can come with that any of that different safety measures. So that time that you have shift work or overtime or you're finishing in the middle of the night, that cannot be considered the reason for deduct that travel between home to work. This means you cannot deduct. So whereas taxpayer also self-employed and their business is based on the home, travel directly to their home place as an employment, as an employee or someone else, right? Travel not deductible. So what they're saying, as an employee, your role is you cannot deduct travel between normal workplaces. But if you are self-employed, in your self-employed is a business, right? So a different case. We will talk about the business in the next slides. So some principles apply. The deductibility of that employee also applied the self person. So it's a part of the business conducted taxpayers, the residents, then travel undertaken from the place of business and another place where basically business activity carried on, a cost of travel is deductible. What's that saying? For an example, you are running a bookkeeping business. You do that all the work from home, right? So that you do the bank reconciliation, all the back end of fees in your home, but you go and meet the client and print it out the reports and get the signature of your BAS and tax returns and etc. So you carry that business in other places, in the client's places. In that case, your travel between your home to that business place is deductible. Where taxpayer full-time employment is conducted as a separate part-time income producing activity at home, travel between employment considered as a non-deductible travel expenses. You can understand that one very straightforward. When you are travel expenses, parking fees and tolls will be deductible. If you are very important, parking fees and tolls only deductible if you are eligible to that your travel expenses. If you are not eligible to the travel, you cannot you cannot deduct the car parking or toll. So we want to check that all the rules what we talked couple of minutes before. Couple of minutes before we talk about the different rules, and if you satisfy that rules, then you can deduct your car expenses. Not only car expenses, you can claim your parking fees and toll. For example, I'm working as a accountant in a particular workplace. Every day going to the workplace, that accounting office and come back. It is my private nature. I cannot deduct. In that case, I cannot deduct my parking fees or toll. But if I am traveling with the alternative workplace, right? One day I park the car, I am eligible to deduct the car deductions. Therefore, I can deduct that my toll, I can deduct my car parking as well. Both together can be deductible. But you must check that you are eligible for car expenses deduction or not. Right. So I put it that we already covered this one. Parking fines cannot be deductible. For speeding fine cannot be deductible. Why? We already talked about last week. The fines and penalties will be not deductible from income tax. Now we will come back with the motor vehicle expenses. How we going to calculate and where we going to report. So the cars that ATO guideline, it's going to say the car mean 1 ton or less or fewer than 9 passengers capacity. So anything come under that category that going to be considered as a car for this calculation purpose. So 1 ton or less or fewer than 9 passengers. If you operate in a business, a company or trust, you can claim motor vehicle provided an employee or the associate part of their employment. What they're saying, if you're running a company or trust, it's a different rule. When you provide in a car, you no need to worry about where they are traveling, as long as they are employee or employees associate. If you provide the car, all the expenses can be claimable from income tax, regardless of they are using for private purpose or business purpose. The motor vehicle must be owned or leased or hire purchase agreement. It means you should have proper authority to use that your motor vehicle to claim the car deduction. You can't claim expenses somebody own the car unless they're giving agreement to you and saying that you can use it that car. If taxpayer uses someone else's car, right? For example, her wife using husband car or friend's car, you can only claim your operational expenses. You cannot claim your depreciation for the car you not own, right? That's important. So whenever met an accident, your client met an accident. So if they paid that some excess onto the third party insurance, that excess will be deductible from income tax. In the same time, if you have no insurance, if you paid all the damages to your client, that will be deductible from your income tax. All right, so now we will come back. So now a different method. We have the two methods. If you're carrying a business, or if you're not carrying a business. If you're not carrying a business, it means you are an employee. You have two choices: cents per kilometer method or logbook. If you're running a sole trader or partnership, also you have two methods: cents per kilometer or logbook. But if you're running as a company or trust, a very simple company and trust, when they're providing that to the employees, that all the expenses can be deductible based on the actual expenses. Based on the actual expenses. However, sole trader or partnership, they are using for their own cars for the business purpose, still can be considered like employee. They can use logbook method, or they can use the cents per kilometer method, right? So can claim deduction business purpose vehicles such as truck and van and similar full deductions. The deduction to be claimed ordinary car using the two methods, whatever methods they use. So we have two methods: cents per kilometer method and logbook method for people, employees, and for company and trust, they can deduct whole expenses. And sole trader and partnership, if they're using the car for their business purpose, they can use one of the methods, cents per kilometer or logbook method. But if the other vehicles like a truck and the vans, which is not satisfy the condition for the normal motor vehicles, can claim the full expenses. For an example, a truck for a farmer or a tractor, that's going to be considered as a normal business carrying vehicles or goods carrying vehicles. Travel expenses, motor vehicle. However, what you can claim when you travel using your car: your fuel and repairs and service, new tires, interest on motor vehicle, lease payments, your insurance, your hire purchase amount, your depreciation, car washes, roadside assistance, everything can be claimable, right? Anything you spend on your car, it will be deductible from your income tax if you satisfy the home to work, or that your travel is business related or work related. You can deduct all of these expenses. However, you cannot deduct in your normal driver's license fees, not deductible, because that's going to be considered as a private nature. Now we will come back to what are the two methods I talk about. So these all are the expenses, how much I can claim. If you choose to do that cents per kilometer method, very simple, your deduction amount will be number of business kilometer your client travel times 68 cents. At this point, 2019-20, 68 cents. However, there may be a change in the future, so that will be determined by ATO every tax year. What is that business kilometer per business kilometer, how much they can claim. So for an example, if your client travel 1,000 kilometer, we can multiple 1,000 times 68 cents, $680 he can claim as a deduction from his income tax. So if we go to that, you can that max. What is that rule? This one, you can claim maximum 5,000 business kilometer per car per year. So very clear, per car per year. So how many kilometer we can climb? Maximum of 5,000 kilometer. For an example, if your client travel 10,000 kilometer in a year for business related kilometers, unfortunately he can only climb 5,000. So in that case, he may use that other method, which is called logbook method. So at this point, the maximum amount they can climb 5,000 kilometer. Right. So you can see per car per year. If a taxpayer used the two cars for the business purpose, one 5,000 kilometer, one for 3,000 kilometer, other one 7,000 kilometer, he can climb from the 7,000 kilometer car maximum of 5,000, and second car he can climb 3,000. So if you use multiple number of cars, each car can be climbed maximum 5,000 kilometer, right? So very important. Each car can be climbed maximum of 5,000 kilometer. So when you use in the cents per kilometer method, you no need to have a written evidence. It's mean you no need have receipts for fuel or insurance or interest or car washes, or you no need to have any receipts. However, you must prove that that much of kilometer you run, right? You cannot just put the 3,500 kilometer I travel. You must say exactly how much, right? So that's the way it's work. And where you and another joint owner use the car, each one can climb. What happened, for an example, husband and wife, they together and join the car, and they for separate income producing purpose, both will be work in a different places, they are traveling. So in that case, each taxpayer can climb 5,000 kilometer, but they should be a joint owner of the cars. So if they're joint owner of the car, how many kilometer they can climb? Maximum of 5,000 kilometer. They each one can climb, right? So one car, in that case, you can see one car we are climbing around 10,000 kilometers because there are two joint owners, right? Husband and wife. So if you use that cents per kilometer method, you cannot climb declining value of the car. If you're using that cents per kilometer method, you cannot separately climb depreciation value of the car. Now we will move into that couple of questions. So Susan traveled 6,000 kilometer. I will explain this one through the in our zero practice manager. It's more appropriate. Right, we'll go to that in our zero practice manager. If you go to the deductions, you can see two type of deductions. D1, work-related car expenses. D2, work-related travel expenses. If that all the cars less than 1 ton and fewer than 9 passengers fall under D1 expenses. So we'll go to here. You can create a new item, how many cars you have. So you already started here. You can put the Toyota or whatever registration number, what is the date purchase and purchase price. And when you come back to down, there's a business percentage. So we will say 100. Or so here, if you're using cents per kilometer method, you are going to click business and say how much a kilometer. So you travel 4,500, no, 2,500 kilometer. 2,500 kilometer. So the business, all are business kilometer. So you did not portion any private or business. You're going to say how much business, all 2,000. You maybe use that car for some other purpose, private purpose. For logbook method, be giving only for business kilometer. So 2,000, you click the business and come back to down and see 2,500 mean $1,700 he can climb. How he got the 1,700? So 0.6968 times 2,500. So that's the way. So in our question here, 6,000 kilometer he travel. So how much is here? 6,000 kilometer. So maximum he can climb 3,400. Why is that? Because 5,000 is the maximum, right? So, and second question, the Toyota, the business kilometer, you call 10,000 is the total kilometer, right? So we'll put it here. 10,000 is total kilometer, right? Total. So you click here total 10,000, 10,000. But the percentage that 60 percentage of the private. So the business percentage will be 40 because 60 is private. Now you can see When you put that business kilometer will be automatically calculated here, and you can see 4,000 times 68 cents, which is 2,720. Everybody understand? So that's the two exercises in that in our PowerPoint slides. You want to work it out which one you're going to click. If it's only business kilometer business, otherwise total, right? And put the percentage here. So I will go back to that in our original screen. So these are the questions we did that in using the Zero Practice Manager. You practice at home when you have the time to see that how is that work. Now, logbook method, sometimes the client will travel more than 5,000 kilometer, or he may be not happy with that cents per kilometer method. It's not going to give him the enough deductions. In that case, he can use that logbook method. The logbook method mean, so the car expenses will be calculated based on that, or the deduction amount calculated based on the car expenses time business percentage of use. So the car expenses, you know that we talk about all the expenses, fuel and repairs and maintenance and depreciation and registration and everything included car expenses. Now we want to know how we going to calculate business percentage. The business percentage to calculate using a logbook. Sometimes we use the word called running chart as well. The logbook mean, so you're going to use logbook a continuous 12 weeks time. Continuously for a 12 weeks time. It may be any 12 weeks, not necessarily start of the year or end of the year or middle of the year. You can decide when you want to use your logbook. So if you use that 12 weeks time, after that, what you are going to write every day morning, this time I started, this time I finished, I went to this place, this is the private travel, this is the business travel, like that you finish it off your diary. So that your running chart or logbook. Logbook can be get it from the office work, or from that you can use the online version from ATO. So when you get it this logbook, you summarize in end of the 12 weeks and say total kilometer you add up, for an example, 10,000 kilometer, and your business kilometer say 6,000 kilometer. So what is the business percentage now? 60 percentage. So the logbook you are using to calculate in your formula in the top for the calculate the business percentage. Because car expenses you can easily calculate how much the total, right? Only thing you want to calculate how much your business percentage. So when you calculate it, that can be used for the whole year. The logbook normally can use same percentage for a 5 years period of time, unless there's a significant change in your travel pattern during the year. The significant mean more than 10 percentage change. In that case, you should do the logbook again. Otherwise, you can continue the same logbook percentage for a 5 years time. So that's it. Use. So when you using the logbook method, normal rule, you must have a written evidence, all of the your expense receipts in your hand. However, fuel and oil, you no need to have a in all the receipts. If you want, you can use that actual expenses method. You can calculate all the receipts. Otherwise, what you can do, you already calculated how much your business travel kilometer, times um, um, number of kilometer, but every cars there's a usage. It's mean fuel consumption, 10 liter per, sorry, 1 liter per 10 kilometer or something like that. You can get it from their vehicle manual, or you could get it from some other sources. When you get it that sources, you can calculate to run 10,000 kilometer how much that fuel required. Then you want to have average fuel price. You can ask the client provide couple of receipts. You can look into that and come back the average price for that per liter. So you know that how many liter petrol required to reach that much of kilometer, times what is the average price of fuel, that going to be considered total fuel cost. So what I'm trying to say here, you no need to have all the fuel receipts for the car expenses. You build it a average price, you already have number of kilometer. Based on that we can work it out. In all other expenses like a registration and insurance and repairs and maintenance and changing the tires and etc., you must have a written evidence. But the fuel, couple of receipts is more than enough for you to establish. Then you have that your logbook. As I said, logbook, this is the way you're doing, and you're going to prepare the depreciation of the car can be included in the logbook method. Cents per kilometer method, we cannot. There are two methods. We can use the prime cost or straight line method. If you are a business, you maybe use some simplified depreciation rule. I will explain this all the rules in detail coming weeks. At this point, I am going to um, not explain, because we are going to cover all the depreciation rules down the track that within a couple of weeks time. Now we will go back and see how we going to do this one in our logbook method. I'm going back to that our XPM. You can see for this instance, we put that 40%. This is the 40% come from your logbook. So you're going to put your registration and insurance and repairs and fuel and depreciation. Especially depreciation, you no need to do a separate calculation. You can go here and click that one and put that all of your car details and put what is the price, what is the purchase price, and put what the method you're going to use. Most of the people using the diminishing value. Put that effective life of the year. Automatically this will be calculated, and that you can see 6,287 for your business portion of the declining value, right? So now we will come back the total that 6,287. We will go back to here in our original car expenses. You can see the 6,000 in your depreciation is here 6,267. So all of your these expenses together total 19,000 12,925. So what is the percentage? 40 percentage of this one, as per the logbook, go to as a expense. So how much is one? 5170. 5170. If you're using cents per kilometer method, only 2,720. If you're using logbook method, 5,170. So which method we will prefer? We will not going to allow that one. We're going to select logbook method. In that case, if you select here cents per kilometer method, you can see the tax payable will goes up, right? Because the less amount of deduction. So you going to click this one accurately, which one you want to, right? Logbook method at this point. So very importantly here, I put it here. You cannot deduct parking fees from using this D1, because parking fees fully for your car and the full amount can be deductible. No need to 40% of that. Why? You went to the work, you park the car, the full amount will be for the car, the deductible. Therefore, we are not going to deduct that car parking under the D1. We will go to the D2 and put it here. Car parking or toll or whatever expenses is no need to apportionment. You can include here. So under the D2, work-related travel expenses, right? What is the difference between D1 and D2? D1, we going to only include fewer than 9 passengers or less than 1 ton capacity cars or motor vehicles. If anything, van or bus or train or truck or whatever other cars or more than 1 ton or more than 9 passengers capacity vehicles, if you use for work related, that will come under the D2, right? Or anything car parking, toll, this type of expenses will fall under D2, right? Now we will come back, go to that in our screen. All right, so these two examples you can use. I used that already. You practice through that Zero Practice Manager. You can understand how does that work. All right. So now we will come back to travel overnight. Sometime that employees traveling overnight for business related travels, right? Go to the Sydney to Melbourne to attend a meeting, or go to the abroad to China or UK or US to negotiate with that suppliers and customers. That type of travel we call your work related overnight travel. When you travel overnight for work purpose, you can claim three type of expenses: one, accommodations, meals, and incidentals. Meals mean you are away, you are having your meals, lunch or breakfast or dinner. Accommodation, you stay in a hotel or motel or caravan park or wherever. An incidental means such as water bottle or little coffee or stationery or pen and paper kind of stuff. So they have three components you can climb if you travel overnight. Day trip, you cannot climb these three items. Very important. The day trip, you cannot climb these three items. Right? You can climb for one day trips. Only the overnight stay only you can climb. So if you are accommodation or overnight travel or meals, you can climb under the work D2, work related travel expenses, not under D1, right? So D2 include when you travel, if you travel using the bus or car, sorry, bus or train or tram or taxi or any other transport mode, if you use, you can climb under the D2. For an example, I will go back and to the Zero Practice Manager. You are seeing right here, Jetstar ticket to Melbourne, you put that $250. Your your Uber fees, $21. Your taxi this much. Your train this much. Tram this much. So everything come under D2, work related expenses, right? So your toll, your parking, right? So everything will be here. You hire car, you hire a car, hire car, it will come up by car from budget car, $340. You are going to include here. Your accommodation, hotel bill, right? Hotel, oops, hotel bill. You're going to put that per night, $100, 5 nights, $500. All right, and your meals. You had a 3 days, so around $275, whatever amount. So like that. So your incidentals, you're going to put it here. You purchase some stationery, $5. So all things come under work-related travel expenses. Very clear. It will not go to the D1. It will come under the D2. Only D1 will be car, right? Which is if you use the car expenses will be deductible. Other all the expenses will be here. Now I will go back to uh, your PowerPoint. Yep, we are here. So the private portion, you have reduced the, if you are staying in a more than a day or something like that, your private purpose, that cannot be deductible. So speeding fine or parking fine, not deductible as we discussed previously. So now we will come back. There's a one important rule called commissioners taxation's reasonable allowance. How much we can climb without that as per ATO guidelines. So I'm going to share with you guys with that the rule on that ATO, how much the travel allowance, how much accommodation, how much meals, how much at incidental we can climb. I think that's the one I put it here is a detailed one, but I'm going to share with you guys the latest one. If you go to here, if you go down a little bit, you can see in your page 4, start from page 4, there are a number of tables. What they're saying, table 1, annual salary 126 and below, you have your maximum accommodation will be 157 for Adelaide, Brisbane 175 per night, right? Breakfast will be per breakfast this much, lunch this much, dinner this much. Incidental cost, it's mean your coffee and water and other small items, $20. So this is for 100 and below. If your income goes to the second level with 126 to 225, so you can increase, you see, it will be increase your hotel bill as well as your lunch and dinner. If you go to the next level, right, so this other table, so you can see different table for this is the table 3. So when you go to that other countries also, it will be here, different country towns and regional towns and other Other countries also here. So this is provided by ATO. What is the reasonable amount you can claim? So Adelaide, for example, $157 for an accommodation for salary less than 126. Now, so most of the time we interpret this is the maximum amount I can claim from income tax. That is really not right. This is the amount for only for evidence purpose, right? If you are spend less than $157, you may no need to have written evidence. That means you no need to have receipts. But if you spend more than $157, you must have a written evidence. You want to have a hotel bill, you want to have your restaurant bill, or you want to have whatever you purchase. But it's a less than this reasonable amount, normal rule, you may no need to have written evidence. But there are little trick I will cover in a next slide. So this table provided to you to determine you must have evidence or no need to have evidence, not to restrict you how much you can climb. Everybody clear? The table or this particular ruling only for to decide how much you can climb. How much you can climb. It is not necessary to decide maximum this amount. It's not work, right? They're not the table only for to determine you should have evidence or you no need to have evidence. If it's $157, if you're above $157, you must have evidence. It's the less than $157, you no need to have evidence most of the time unless some exceptional circumstances. Right. So all these different the numbers for evidence purposes provided by a tax office every year it will be changed. I will go back to that evidence. There are two type of evidence. I will back to that in my original screen now. You can see there are two type of evidences. One called written evidence, other one called travel diary. What the written evidence mean? Which is you have the all of your breakfast and lunch and dinner and accommodation and incidental. You have a receipts or you have your bank receipts or customer tax invoice or whatever document to prove you spend that money for that purpose. Second one, travel diary. So when you travel different places, you must put it your date and place and time and duration of your business activity, and you put it in your own diary or in your iPad or in your different softwares nowadays. You can use it whatever you like, but or you can use that like a paper, right? Diary that that paper based diaries. So whatever you just wherever you travel, you're going to put all the details. So these two type of evidence called written evidence and travel diary evidence, it may be vary depend on the circumstances. So it depend on that you got the allowance from your employer or not. You are traveling domestic or overseas. You are traveling length, how long you are traveling, 6 days or more or less than 6 days. Okay, what kind of occupation and how much your wages. All this will be determined. Now we will come back. The number one, your client did not receive the travel allowance, but he traveled. Sometime, assume that you are working as a CPA accountant. You want to go to you are working in Melbourne. You want to go to Sydney for a meeting. So employer said, hey, I cannot give the transport or accommodation or anything, but I can give you 1 day leave, but I am not going to give you travel allowance because this is your professional development. So you are traveling to that work related or your professional development related can be deductible. However, employer did not provide you any travel allowance for that. In that case, if you travel less than 6 nights, you must have a written evidence. No need to have diary. International travel also same. If you travel more than 6 nights and stay more than 6 nights, so in that case, uh, you must have a written evidence and travel diary. International, you should have written evidence and travel diary. So that's the way it's work. So if you second part, you're going for a business travel, you're going for a business travel, and employer paid you some travel allowance. For example, you are going for a meeting at one place to other place, so completely business related. Employer happy to pay your travel allowance. He paying travel allowance to you. So you are receiving travel allowance, but do not claim more than reasonable amount, right? So what happened? Your employer giving you the travel allowance and do not claim more than that reasonable amount what we saw in that ATO site couple of minutes before. In that case, you don't need to have any evidence unless you are a air crew member. You should have a diary. Right? You can say less than or more than night, everything. No, no, no. Because you're getting the travel allowance, you are paid less than, that's a reasonable amount. Second one, you receive the travel allowance and you claim more than reasonable amount. It's mean, for example, Adelaide, you spend $200 per night. Normal rule is 157. In that case, you must have a different rule. If the less than 6 night written evidence or travel diary not required, more than 6 nights is a travel diary and written evidence both together required. Okay. I think in my slides I did not mention what happened if you travel 6 days, right? So the 6 days or more, it will be in the second line. The less than 6 night in the first line, you can see every rule for less than 6 night. In the second row, you can see I put it more than 6 night. So less than 6 night, this much more than 6 night draw here. What about 6 night? So please read that in your second row when you say more than 6 night in a row, six or more than 6 night in a row, right? That's the way you want to read it. 6 or more than 6 night in a row. What is that? For example, first, yes, 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 right? Thank you for that. We will move into that one. So overtime meals, you can claim the deduction overtime meals without getting the written evidence if you following applies. So I'm talking about this reasonable allowance. If you get paid overtime meal allowance under the industrial instruments such as award, included in the meal allowance in your income, and that purchase consumed meals during the overtime, so only can climb up reasonable expenses amount. If you climb more than reasonable expenses amount, you must have a evidence, right? So this rule only for overtime meals if you climbing reasonable allowance. So if you paid some overtime meal allowance and if you have receipts and if you spend the money, you can climb whatever circumstances. So, but if you want to claim the reasonable amount, you must have an overtime meal allowance. You must have you paid, your amount is included in your allowances. But if you climb more than that amount, same as the travel what we discussed. So that the document what we see reading that ruling only for substantiation purpose, not to that climbing purpose, right? If you spend the money more than that amount, you no need to use these three dot points. You can climb because you spend that money, same as what we discussed. Overtime meal allowance, generally you must include whatever overtime meals they paid as a income in your overtime meal sections, right? My apology. So overtime meal allowance, where are we going to include in the D2 or other work related item? Then that this is nothing connected within your travel mean. We are going to include overtime meals under the other work related item in your D5, right? But it is not connected with your travel. Now we will move into the self-education expenses, one of the important topic, which is called self-education expenses. Most of the taxpayers will come up with that one. To claim that self-education expenses, your course should be eligible to claim, right? What does the course eligibility mean? The course must have a sufficient connection to your current work activities as an employee. What's that saying? The course must have a sufficient connection to your current work activities as an employee. Clear? So if there is no sufficient connection, we cannot deduct. So as an accountant, I am doing some medical doctor's course. I cannot claim from my income tax. As an accountant, I'm doing Bachelor of Science. I cannot deduct from my income tax because there's no sufficient connection between accountant's jobs and Bachelor of Medicine or Bachelor of Science. But if I am doing Bachelor of Accounting, yes, that's deductible, right? But however, you can see when you deduct that, you must have a current employment. So your current work, what you're working as an accountant, for an example, your studies will be maintained and improve the special skills and knowledge required to that your current work activities. You work as an accountant, you're doing a Bachelor of Accounting, yes, maintain and improve. You work as an accountant, you're doing a tax course, is maintain and improve. Right? Therefore, we can deduct from our income tax. If you not meet this criteria, second criteria say, oh, result in or likely to be increase your income. For example, a aged care nurse, so aged care worker is studying enrollment nursing. There's very clear relationship. She may be moving to the next level and increasing her income. Therefore, that can be deductible from income tax. So there are one or other, if it is satisfied, you can deduct your study related expenses from your income tax. Now we are going to see where we're going to include, how we're going to work it out, what kind of expenses we can deduct. Expenses we categorize as a three type of expenses: general course expenses, your tuition fees and etc., and depreciating assets. You may be used different assets for your studies like a computer and calculator and iPad and iPhone and etc. And you may be used your car to travel between the uni and come back. So all these expenses will be deductible. So I listed items: your accommodation and meals and car expenses, computer consumables, and fees payable, some higher education loan program, but not loan repayments, um, home office running expenses, interest. So all these expenses, what I listed, you may deduct from your income tax, right? You can see travel between your home and place of education is deductible. Your textbook, your postage, your phone calls, right? So that study related phone calls, right? Your parking fees, your internet usage, right? And equipment and repairs, and everything will be your train fees, your Uber fees to go to uni. So all this will be your home office running expenses. If you get a loan for your study, your bank interest, everything will be deductible. Self-education expenses declining value, as I said, you're using different items such as computer, filing cabinet, calculator, any other equipments that can be deductible from your income tax. If it's less than $300, immediately deductible. If it's more than $300, you want to use the depreciation rule and deduct from your income tax, right? That's called self-education expenses. Self-education expenses. If you also use that assets for private purpose, you want to apportionment. For example, you're using your phone for study as well as your private. In that case, you should portion that amount, how much you want to claim. So travel expenses, you can see, I will put it that one. This is a little bit, the rule is very important here. If you go to your uni and come back, both will be green, deductible. From your work, you go to uni and come back to your workplace, both will be deductible. However, if you start from home, go to uni and then go to work, the second leg will be not deductible. Can you see? If you from home to place of education, then go to your place of work, that second leg will be deductible. First part is deductible. Second part, not deductible. You finish your work at the evening at workplace and go to uni, that deductible. After finishing your study, go to home, it's not deductible. So there are two things you can see what can deduct, what can't deduct. But if you go to uni and come back, that will be both will be deductible. But if you go home to uni and then go to work, second part is not deductible. If you're going by train, the first part of the train fare will be deductible. Second part is not deductible. You can't claim the tuition fees paid by someone. If the employer paid your fees, it will be deductible, not deductible. Student amount contributions, repayments are normally not deductible. Home office expenses, we talked about last week, two type of home office expenses, running expenses and occupancy expenses. The running expenses will be deductible. What are the running expenses? Your gas and electricity and heating and cooling and cleaning, your furnitures, your computers, your phone and internet, everything will be deductible. However, your occupancy expenses such as rent or mortgage interest or rates such as council rate or land tax or emergency service levy or insurance is not deductible. Right? So if you study from home in your study room, you can deduct all the running expenses, not the occupancy expenses. If when you travel for study related travel in a different places, same rule applicable what we talked previously, you can deduct. But just go to the uni and close at the uni, if you stay in a room, that is not going to be deductible, right? If you travel different places, repayment of any of the study loans are not deductible. Please note that if any of your client doing diploma of level or advanced levels educations, they may get vet fee help or fee help. So if they're getting for vet fee help, that will be fully deductible in the same year when they finish the studies. Vet fee help mean kind of loan from ATO for vocational training sector. Vocational mean type level studies, not the university studies. All right. Now we have the $250. So you can see that for self-education is restricted to $250 and more. It means, for example, if you spend $240, you cannot claim anything from self-education because capped at $250. So if you want to climb, if you get a $300, if you spend on your training, you can only climb $50, right? So 250 up to 250, it is capped. You cannot climb less than 250. If you fire $600 in your tuition fees, you can only climb $350 because first 250 is capped, right? Reduced by 250. You can see for the self-education purpose, they are using a category of the expenses A, B, C, D, E. Each category, you want to click that the right category when you climb your self-education expenses. So when you have the time, please read and understand which one come under A, which one B, which one C, very straightforward, right? So you're going to do that one. So now I am going back to that in our D4 self-education expenses and see how we're going to enter this information in our D4. So D4 here, as I will click here, tuition fees, for example, $600, which will come under category A. So you can click A. It's a declining value, B. If you do that some declining value for your computer, or if you're using that any car under logbook, it will come under this category. A, B, C, D. But you cannot see D. D mean if you go back to your table, they say if you use the logbook method, that's going to be, sorry, if you use the cents per kilometer method for your car travel, that's come under D. So you could use the D here under the motor vehicle expenses and click here and put that how many kilometer you travel between uni. For example, 4,500 kilometer you travel, right? So you can hear $3,600 which is come up as a D here. Everybody happy with that? Right. So automatically expense code will come up when you use it. If you do any depreciations, you go into the depreciable assets expenses, right? So this is the way you work it out, all of your expenses. There are four category here. If you want to depreciate anything, you can put it here as a depreciation. It will come up most probably B as a depreciable expenses. And all other expenses, you're going to put it here. For example, you have a so public transport, the bus fees under the bus fare or bus fees, whatever. So we see $100, and the bus will come up A. So if you do some repairs, I think repairs come under C, maybe $500 C. So like that you're going to do. So you can see that 250 only one time will be deducted, not every expenses, right? The total expenses minus $250, right? If I deducted, if you add this one, you can see this is 426, 360 plus 1200. So you have 426. So $250 will go out. So you want to see that your skills, your which category you are climbing. That's one. Under the skills, maintain, improve the skills, or likely to be increase your income. You must click one of that. I prefer to click KOI, not to the other. Most probably other direct connections very hard to prove. So when you click this one, done. So now we will move back to in our original screen. So other work-related items, I put an example. You plug into these numbers in your XPM and get the answers, and I'm sure you will be enjoy. Now we will move into the tools and equipments and other assets. When you use the tools and equipment for your work-related purpose, you can deduct from your income tax. When you are using tools and equipments for your work-related purpose, you can deduct from your income tax. Now, question is, what are the tools related? For example, as an accountant, I may be getting the laptop to deduct, or my calculator will be deductible. If your purchase amount less than $300, immediately you can deduct from your income tax. If it's a more than $300, you must use that declining value method. And over the years, you should climb little based on that calculation method. That's diminishing method or prime cost method, depend on that which method you use. So normally work-related tools are permitted one item per year. For example, you cannot buy 4 laptops and climb from your income tax. Normally one item per year. If one is replaced or one is repaired, you can climb all the repairs, or fully not work, you can say, yep, one I bought it, it's not working. I bought it other one and I'm climbing. So that's reasonable. Only the replacement purchase only will be deductible. You cannot climb 2 laptop or the same laptop in a year. Sometime if you use different business purpose, for example, you are using MacBook as well as a Windows laptop, different reason you should have that both. In that case, both will be deductible because that's 2 different machines, different purpose you may be used. Right. And all of your desk and chairs and lamps and hand tools and protective items and everything will be come under the work-related tools and equipment and other assets you can deduct from your income tax. Where you are going to include this one under the D5 work-related items, D5, right? Cosmetic containing sun protection. So when you're using the sun, not only sunscreen, if your cosmetic have a sun protection feature, if you work under the sun, you may deduct that one from your income tax, right? But if you're predominantly used for that, uh, safe from the sun, you can deduct. If your private purpose and work-related purpose, not only you are wearing this that particular cosmetic for work, if you're wearing for your dinner and parties as well, so in that case you want to proportionally say how much I use for that my work, how much for in my parties and private functions. You want to portion and climb exactly the business percentage. All right. Handbags and briefcase and structures, anything you carrying that work related item in your bags, no matter what kind of bag, if you're predominantly using the bag to carrying your work related documents or equipment such as laptop or iPad or iPhone or whatever, that amount can be deductible from your income tax. However, if you're traveling your bag with the private items such as your cosmetics or your more personal phone, cannot be considered as a work related. If you're using your personal as well as business, in that case you want to apportion and how much the capacity you are using for personal purpose, what is the capacity you are using for private purpose. So how many days you are using for work, how many days you are using for your private function. So you want to work it out, what is the private portion, what is the business portion. You can only claim business portion from income tax. If it's less than $300, immediately deductible. If it's more than $300, you want to use the depreciation value method and deduct over the years. Right. Books and periodical and digital information. So whenever you used to work, you may be required some technical updates. You join that subscribe with the ebooks or e-journals or purchase a digital material that can be claimed under other work related items. Whatever subscription you make, you can claim. If it's less than $300, immediately you can claim. If it's more than $300, you want to use that as a depreciation method using library category. Right, library category. Cash shortage and client bad debts can be deductible. Client bad debts I will talk down the track. The cash shortage, for example, if it is an employee working in the till, he lost that some money, and employer asked to pay back. That cash shortage can be deductible from income tax. Not theft. Actually, while he's working, he when they're balancing only, they understand he gave some money more to that his client, that customers. Now he's want to balance out and he paid 20 or 30 or 500 or whatever dollar. Is a cash shortage that can be deductible from income tax. Glasses and contact lenses and protective glasses is as we discussed previously, if you are using particular glasses for your health reason, is not deductible. Like a nurses with the prescripted classes, not deductible. However, if you are using for your safety reason, safety glasses or safety contact lenses, that can be deductible because that's a protective nature that we already discussed under the clothing. Anything protective nature can be claimable under work related clothing, protective clothing, right? So I already discussed this topic, so you can work it out. And then we will move into that income protection insurance. So your taxpayer maybe have an insurance premium to protect his income. If a loss of income, right? If he lost the job, the insurance company will pay that his salary. That's called income protection insurance. When you have the income protection insurance, whatever premium you are paying, that can be deduct from your income tax. However, this is will be changed now. You go to the D15 and going to deduct this one, right? Not in the D5. If you go to the D15, click on that other deductions and type that insurance, and you can see protection, sickness, and accidental insurance premiums. So click here and put that $100 or $1,200 in a year or whatever amount you're going to include here is putting that protective in your income protections insurance, right? IPI. So that's you type all the stuff. That's the way it's work. It's not the other work related item. Let's go to the protective insurance. Please note that any of your hospital cover or life insurance cannot be deduct under the protective insurance. Income protection insurance only can be deductible. Your health insurance or in your hospital cover or your life insurance or your normal accident policy cannot be deductible here. When we go back to that in our screen, you can see other work related item. Here only you are going to put some anything not included in that other area. I will come in a couple of minutes. You can see we are going to talk about the phone expenses in a minute. Now I will go back to that my original screen. I am right. Can you see you can't claim the premium or part of the premium for your policy compensates such as things physical injury or superannuation or anything? Cannot. Only thing protecting your income. If you lost the job, insurance company pay you a salary. Because of that, you have an insurance that's called income protection insurance. Whatever income protection insurance you paid, that can be claimable from your income tax. So your life insurance or trauma insurance or critical insurance cannot be deducted from your income tax. This is only for income protection insurance. Now we've been in seminars and conference and educational workshop. When you travel to these places, your work travel, your fees you paid for the seminar, whatever that your meal, if it's overnight seminars, everything will be deductible under other work related expenses under the D5, right? D5, we can deduct not only the seminars fee what you paid, your travel, if you overnight stay, your accommodation, your meal, and your incidental, everything can be deductible if you are going through that uh, go to that your work related seminars and conferences and educations. Union fees and subscription to association and bargaining agent fees can be deductible. So for example, if you work in a place, you may be a union member of nurses union or aged care unions, right? Or that's a teachers association. Whatever union fees you're paying, that will be deductible. Sometimes you have association membership, CPA membership, IPA membership, chartered membership, right? This is called your association subscriptions. That also can be deductible. But the initial joining fees for that $42 for each association is a maximum, right? But this is a joining fees. I put in the red. Initial joining fees restricted to $42. Some institution charging initial joining fees thousands of dollars, right? But uh, uh, for your membership, whatever you pay, the total amount will be deductible. For example, CPA membership, you are paying $542, that whole amount will be deductible. Over $600, the whole the amount will be deductible. The yearly subscription fully deductible. When you join, there are restrictions to $42. You can climb only levy strike fund. Yeah, it's good. Most of the union association member statement fees are subscription paid. You can see they will send you the statements. Working with the children, this we call police check. So whenever you get the national police clearance or DCS children check, um, um, you can only climb when while you are working get that police check. To get a new employment, if you get a police check or children that police check cannot be deductible from your income tax. While you are working, if you do the check because of the employment conditions, we can deduct from your income tax. Now, mobile phone and internet and home phone expenses, we will see. So if you use that mobile phone only for the business purpose, you can claim straight away all the expenses related to the phone. So most of the small business owners or small employees, they may have two phones, one for work phone, one for the personal phone. So all the work related phone, purchase the phone and that the monthly charges and your cover and your updates, anything, everything will be deductible for business phone. However, sometimes we use business phone, business calls and phone call, the private calls in the same phone. In that case, how much we can deduct? Or internet I'm using at home for my private purpose and business purpose. Home phone I'm using sometimes business and private. So how we going to deduct? If you only use for business purpose, whole expenses will be deductible. That's easy. But if you're using business and private, how much we can deduct, we will work it out. There are different rules in this one. So what are the expense you can claim? Paid those costs, and you know that your the cost of the phone is mean purchase price of the phone, $500 or $600, and you must have a monthly charges that can be deductible, or any charges will be deductible. Substantiation claim: if the deduction is less than $50, you no need to have evidence in a year. 1 year, less than $15 for $50 for phone or internet, you no need to have substantiation. So if it's more than $50, you must have a records to prove this expense is incurred, right? So sometime employer provide the phone to that employee, and if he paid everything, phone charges and his monthly pay, that you cannot deduct from your personal income tax return because employer already deducted. Employer only provided a phone, you are paying that monthly charges, you may be able to deduct that monthly charges because that's the expense you incur. Cost incurred before work commence. Normally, if you can claim your phone charges, phone expenses while you're working, if you call to the supplier or clients or customers or employees, anything, if you are any stakeholders connected with the business, if you call, that will be deductible. If you are a casual employee, sometime employees will come and say, hey, I am a casual employee, I am keeping my phone in my hand, only I will get it that from my agency or employer. When they call, I will go to work. Therefore, in my phone is connected with my job, I want to claim from my income tax. Unfortunately, very clear guidelines that casual employees keeping the phone to get the job not deductible. Very clear, right? It's exactly the same word in the guidelines. Climbing the phone. So if you're using the phone in the home, your private and business purpose, how much we can climb? There are three different type of rules. One, if you have a number of calls in your hand, you can multiple by per cents rate. For an example, if you're using the land phone, 25 cents, and your mobile phone, 75 cents, and your messages, 10 cents per message. If you say in a year you have 1,000 land phone calls, 1,000 times 25 cents. If you have 1,000 mobile call for business related, 75 cents times 1,000, right? You have 500 text messages, 500 times 10 cents per message. So it's very easy. But however, how we going to keep the old record for 365 days? How many phone calls for business? How many calls for the private? It's a little bit harder. The long, big calculation work. So if you're not happy to use this method, if you can, you can. That's good, your choice. But however, if you're using other method, what you can do, you can take it a one same as logbook what you did here, take it that itemized bill from your provider like a Vodafone or Telestar or Optus. You can get their mobile 1 month bill. You can decide which month you prefer, maybe any 1 month in a year. You select and you notice that one very clearly. You mark that these are the for business calls, these are the private calls, and you calculate how many total number of calls in that particular month, for example 1,000, and how many calls are private, for example 400. In that case 40% private, 60% in your um, uh, business calls. So based on that you can work it out. um, Work it out how much in your how much you are going to climb, right? Anybody have any other questions? No? Excellent. So now we will move into that amount of time. So number of calls. So for example, 1,000 calls you made in the month, and how much that calls you make it for private, how much you calls make it for business, you can work it out. Then when you come back to amount of time, how much that amount of time you use that for business purpose, how much for private purpose. You go to that 4 week, 1 month bill and calculate the total duration of the course, total duration of your calls in a month. What is the proportion for private? What is the proportion for business? So that the percentage of that one can be calculated. Everybody happy with that? So you're going to use that 4 weeks bill and decide what is the proportion for the business, what is the proportion for the um, what the proportion for the private based on that business percentage. For example, your total bill $500, business percentage 60%, you multiple by 60. So that's the way you're going to calculate all of the your uh, phone expenses. Now, so sometime if you use the internet as well to calculate the internet, you can ask from your provider how much the download and upload in that particular period of 12 weeks, and so 4 weeks is mean a month, and use that how much the business, how much the private, based on the ratio you can calculate your internet as well. So one month if you get the bill, that will be represent the whole year. Every year you must do this one, not only one time. Every year you must do this proportion once. All right. So I put it couple of example. If you are no itemized bill, if you're using a prepaid, you can use that a diary record and work it out how many business calls, how many private calls. Based on that, you can work it out. The bundles and internet plans, I already discussed. That's the way you're going to work it out. Sometimes internet and mobile phone come as a together as a bundle. In that case, normal rule be 50% for internet, 50% for mobile. For example, $100 package, phone and internet. In that case, $50 for internet, $50 for phone. So when you calculate yearly, $50 times 12, that's the total internet charges. What is the business percentage you're going to calculate? What is the business percentage of phone you're going to calculate? So you can see there are a number of different examples I provided here. You just go through and work it out, and you can understand how these proportions work, right? I'm not going to explain this one, very just an example for you to understand. And only thing I will go to that zero practice manager, and can you see that other work related expenses? For example, your phone expenses, $1,200, and your private business percentage 60. You can see $720 you can climb, right? So this is the one in our other work related item, phone expenses calculations. So practice again with your zero practice manager, and familiar with that once how it does work, and looking forward to see you in the next week. Thank you everyone. Bye.